What's up, everyone? Welcome to the 29th episode of Trench Talk. My name is Anonymous22 with one of my co-hosts. Interviews me just not be with us today. Just a little busy with some outside stuff. But LTR, how you doing today?
I'm doing well. I'm a little tired. Today was a long day. I'm sure we'll get into it, but otherwise I can't complain. I mean, it's been a very lucrative week and month for me, so it's been exciting. But it's kind of funny because it's like probably been one of my best months trading ever, and yet I kind of feel like shit. Like honestly, like I'm tired, headaches, hair thinning, whatnot. Like it's just it's definitely been a sacrifice, I'd say. So it'll be interesting to see how things progress from here.
No, I mean it's just volume. That's all it is. Like you're gonna like a really good week with just all the volume. You might make like a lot of money, but like it's just so much shit going on. It's just the stress is always going to be there.
I think
it's
also
crazy.
like I'd made so much, and yet like you see some of the P&Ls on Trump, and then you're like, oh my gosh. So I think you lose sight for sure of reality, which thankfully, like I've said before, like being in college helps me ground myself, like because I'll go to class and I'll hear people talking about their minimum wage jobs or whatever. So I have a nice grounding sense there. But yeah, this weekend was pretty tough. You unless you made like 50 mil, you probably feel like you underperformed, which is pretty wild.
Only in crypto, in it. But anyways, we have a very special guest today, Kell. Kell, how are you doing today, sir?
We're living, man. How we doing?
Same shit, different day. Just more volume. That's really it, honestly.
Different shit is more the.
Yeah, I mean, we can just go back. We were talking about, like, I don't know. It feels like really shitty to complain. It really, really does. Oh no, I made a lot of money, and like, what are you complaining about?
100%. There's no crying aloud in the casino, especially if you're winning chips.
Yeah,
exactly.
It's definitely one of the biggest leaks that I've had, and a lot of people have historically, is pocket watching and comparing P&Ls, which leads you to gamble more. You lose your edge, but you keep gambling more. Then you just lose everything, right? So,
yeah, I was saying that today. I just put out a tweet not too long ago that was like, you might have saw it, Cal. I was like, I wonder how much people who got lucky on Trump, right? And I don't know whether they just like took the chance, went to bed, and woke up to millions of P&L. And I wonder how much of that has already been given back, especially after today. I would say the percentage is probably pretty high because I know a lot of people who kind of got lucky on it, who just kind of blasted and then forgot about it. So I think, I mean, it's always that saying, right? Like in crypto, making money is pretty easy, but keeping it's hard. Mm-hmm. And I think that's especially getting more and more true as we see the more and more degenerate parts, and then just like greed, especially coming from comparison.
I mean, there's a reason why lottery winners always lose all the money, right?
Yep.
If you don't put in the psychological, emotional effort to be in the right frame of mind, then even if you win big, you just end up losing it all. and I mean, I know this because I've experienced it, and I've seen countless others experience it. So I'm sure we'll talk about all the background and all that stuff. So
yeah, no, I mean, God, I've had a long day. I've had a long day looking at the wallet trackers, and it's I think just today it's just crazy. I mean, our last podcast we had was Thursday with Farouk, and that was the Friday was the Trump drop. So
great timing on that podcast from us, really. Like,
that was funny. That was some crazy foreshadowing in that podcast. Trump didn't give me ECA though, little shit. But anyways, yeah. I mean, I don't even know where to start. LTR, do you have somewhere to start? I've been just so lost. It's just this week has just been a blur, dude.
Yeah, I'd want to start with hearing Kell's background first off. Like, I think a lot of people have seen him pop up on Twitter, especially he nailed the AI trades, I would say. and he's got some really smart writings. I would say he's a very good writer, and we don't see that often on Twitter. It's mostly just shit posts. So when you see a quality long form writing piece, you're kind of like, this is actually really good, and you don't see that often. So I'd love to hear your background, Cal.
Yeah, so I joined crypto straight out of college, 2021. I had been studying, like crypto classes and kind of dipping my toes in the water, in the Ponzi waters, if you will, in DeFi summer 2020. So I always like to say the first ridiculous Ponzi you participate in marks the entrance date to being crypto native. And for me, that was a project called Iron Finance, which Mark Cuban was a big fan of for roughly 48 hours. So this was an algo stablecoin on Polygon.
Oh no.
And this really foreshadowed the whole Luna trade and Olympus for that matter. But it had this I found it because back then there's this site called Beefy Finance.
Mm-hmm.
And it could just show you all the crazy yield farms, and it would auto compound for you. And so naturally, what you would do is you sort by the biggest APY. And Iron Finance was paying 3,000,000% APY or something crazy. And I knew nothing about crypto, but I was like, all right, that sounds like a pretty good yield,
APY,
right?
dude.
Let's lock in. So I remember buying that at $2, and it went to maybe $4, and I was like, all right, cool. I'm gonna sell this. I'm good off this. And then it goes from $4 to $350, and then $350 to $70, $60 in 2 days, right? And at the top, I remember Mark Cuban wrote. It's funny you mentioned long form writing and blog posts. He wrote this post about how stable coins were the future of finance, and how he had found this stable coin project called Iron Finance. And he was like, this is the yield I'm getting is so good. This is the best project, et cetera, et cetera. 24 hours from that post, that shit was at 0. Stone 0. So that was my entrance to crypto, seeing that whole thing play out. So 2021, I went to Masari Research, one of the few bigger, more known research firms, alongside some others, and that's where I kind of learned the writing technique, if you will. And so for 3 years there, I covered a whole bunch of different things: consumer, gaming, social tokens before that was a thing, and then kind of had my big break with Solana after the FTX collapse. So that was a whole thing in and of itself. I'm happy to tell that story too, but I guess I'll pause there for a second.
No, I think that's really cool, because I think most people we've had on this podcast so far, just based on what this podcast is definitely more the degenerate side. And obviously you were a degen with the Iron Finance stuff, but being a part of a high-end firm research thing is pretty cool, and we haven't had anyone on like that. And so I think you probably have some interesting insights into that industry, because I think crypto Twitter often talks about VCs and firms, but they don't really know much about the inner workings. And I think that's true with market makers as well. Mm-hmm. I see a lot of discussion about MMs doing certain stuff, and I'm like, well, it's not really what an MM does. You're kind of off the mark there. But we've had a lot of degenerates on that mostly got started in NFTs. So it's interesting to see. I think we had Icebergy on. He was a big DeFi head as well. And so it is interesting to see the proliferation of the people who were NFT focused. A lot of them are probably the more on-chain scalper, ex-Fortnite pros. And then I think a lot of the DeFi guys went more of, I would say, the higher IQ route, which both make a lot of money. So it's interesting to see that for sure.
It's funny because I was in a weird middle ground where my entrance research report to get into Masari was actually about art blocks. in the summer of 2021. So I was, another lesson learned, just like being naive and not understanding how not understanding how crazily things can rip in crypto.
Yeah.
I was super early to art blocks. Like I was buying art blocks before like Fidenza came out, before Ringers came out. But like I wasn't buying it in like I'm gonna make a trade that's gonna like make a ton of money way.
Mm-hmm.
I just bought like a few random ones that I thought were kind of cool.
Yeah.
And just like didn't think about it again. And then fast forward to that summer, like Fidenzas had already gone to like, I don't know, 10 ETH or something like that. And I was like, all right, this seems cool and different. Like I'll write about this. And this is what I would say is the beginning of a multi-year, what I'll call analyst trap, which is focusing on the analysis and the writing and the storytelling and not the, like, what do I need to do to make the most money off of this thing? Which is wrapped up in that classic statement from CMS, which is, do you want to be right or make money?
Mm-hmm.
And so, like, a lot of people in the researcher community and even in the VC community, they're more incentivized, or the culture around them is more around being right than it is like taking appropriate risk. And so later on in my career, like I had to learn I call it the trader brain versus the researcher brain.
Yeah.
But anyways, yeah, so I wrote about art blocks in like July of 2021. And like fast forward 2 months later, what I already thought was this huge thing, you had like 3AC buying Fidenzas for millions of dollars. Even the most dog shit tiered stuff on art blocks was going to like 10 ETH and all this. So that was pretty crazy. But yeah, I definitely agree that in general, you see a lot more DeFi types come out of the research community, and the NFT types are definitely more like on-chain native, right?
I will say though, I think your background in research and like I've noticed that a lot of DeFi and centralized exchange traders nailed AI. And it's been really interesting to see that, because I think a lot of like myself and the trench guys who are much more like scalp, get in super early, make your 100x, get out, go to the next one. I think a lot of us missed out on the latter half of the gains to be had in AI, just because we weren't as used to like scouring white papers and really digging into like, okay, who is this dev and where has he worked and what's his background, LinkedIn's, GitHub's, like all of that. And so I've noticed that like people like you and other like DeFi people that were more used to like, okay, I actually got to read this white paper on this algo stablecoin. I noticed they nailed it. And so that's been really interesting to see that, like, I think it's just true that you can really make money right or left curve in crypto. You just can't be mid curve. And I think that goes along with what you were saying about like being right or making money. And I think you just have to keep your edge for sure.
Yeah, I mean, we saw it. Just so many different people just want an AI, and then it was like this big thing because I think we went from like animal coins straight into AI.
Yeah.
And it was very hard for, I think, animal coin enjoyers to move into AI, and then just vice versa. So that's why, like, recent stuff that's going on, like, the past week, just, like, these little, like, one-day metas, like, I know a lot of, like, the AI people are struggling, and then, some of the, just the stupid idiot left curve traders are just, like, making, a shit ton of money. It's just cycles, just small little things that, random crap that can happen. And it's great. It's awesome to see, like, just multitudes of people winning.
100%. And I think as an individual trader, the best thing you can do is just fully understand, like, what your source or sources of edge are. Like, for me, even if you give me, like, just, like, 48 hours to think about something, like, that's a source of edge for me, because I've done research on very compressed time frames my whole career. And even like in school, I did economics and philosophy, and I was one of those. I was never one of these like, oh, my paper is due in 3 weeks. Let me break it up, and I'll do the first bit the first 2 days and all this other stuff. No, I was let me go like party with my boys, and then the last 2 days I'll finish this paper, right? So that's an edge for me. But when the meta shifts to how many times will people send this fake Baron coin to 300 mil market cap in the span of 24 hours and then back to zero? Like, that speed edge, I just don't have. Like, that's way more in the realm of the on-chain scalp, the NFT mint flippers. Like, that's their bread and butter, right? And you can make a ton of bread both ways, but people always lose all their money because they try and be the best at everything, right?
Yeah. No, I think that's a major point. It's like, whenever I've tried to leverage trade or do anything outside of what I'm really good at, it's just never ended well. And I think I've accepted, like, I've tried to get better at, like, the misses I'll cope over are the misses I should have hit. Whereas, like, if I miss something that was totally, like, outside of my realm and outside of my edge, I'll just kind of be like, man, whatever. Like, I wasn't going to hit that in any capacity anyway, unless I got lucky. And I think a lot of people just need to get better at accepting that. Like, okay, I'm good at this portion of crypto, and so everything outside of that I can try to get better at. I don't think you should just, like, give up or not try to learn more stuff for sure. But I think a lot of times people try and learn things in crypto by diving head first. And I think we see this with leverage trading a lot. Is like, I've seen a lot of my homies who make millions on chain from trading shit coins. We talked about this in your group. I was like, man, I saw someone like make like 5 mil in the trenches, and then he deposited like $1 mil to Bybit and just started going ham on leverage. And he had never traded leverage before, and he lost it all. And it was like, yeah, I think if you want to learn something, you have to go back to square one, point zero. And I think a lot of people in crypto, when they want to learn something new, they start from where they are rather than where they should.
Mm-hmm. Yeah, it's a great point. It's such an allure, it's such a draw to be like, oh man, I just ran up 10K to $1 mil on some on-chain shitter. All right, now if I leverage trade that mil, like, I'm gonna be at 10 mil, bro. And it's just like, it just doesn't happen. So yeah, just off that alone, you can save and thus make a lot of money.
Yeah, I think on CT there's a lot of like X culture, and not to be like pun, but like, I 10x'd from here and I need a 10x from here, and it's like, man, I think we just need to zoom out sometimes. It's like I've tried to be better about that. Like, man, 3 years ago, almost on the day, it was February 22, I joined the space with $300 and 0.3 ETH. And like, so it's like, yeah, I might be depressed that I missed Trump or whatever, but like, man, I've come a long way. And I think a lot of people need to recognize that. Like, and then I think a lot of people need to recognize that for knowing when to, like, I don't know, take money out to the bank or something, as I've seen a lot of people get in this headspace where, let's say, they started with 10K and they ran it to 5 mil, but they had some really bad drawdown and now they're at 2.5 mil. They'll like write their whole career off and say like, well, I'll just gamble this 2.5 mil to zero. And I'm like, no, you started at 10K, and like, yeah, sure, you were at 5 mil, but like, you're still 10K to 2.5 mil right now. And I think there's a big culture on crypto Twitter where it's like the money isn't real. And I see this all the time in chats. Is like, oh, yeah, I'm in for nothing and I'm up like 500K, but I'm just going to let it ride. And I'm like, well, I mean, that's good sometimes, but like that 500K is still real money.
100%. Like that's your fucking, even at the most vain level, like that's your Lambo right there, bro.
Exactly.
With change.
No, let it ride. Dream a little. I'm like, bro, just because you're, and I mean, I had this happen to me on a coin like right now. Is like I got kind of trapped up in that. I'm like, well, it could 10x from here, and I only put in X amount, so it's like I'm okay round tripping to zero. The money's not real. And I'm like, and now that I've like round tripped a lot on it, I'm like, damn, that money was pretty real.
Yeah, it's only when it's gone you're like, oh shit, I could have bought. I mean, even if you just, have like, let's say you have no material desires in the world. Your only goal in life is to maximize your on-chain score.
Mm-hmm.
Even if that was even if that was anyone's mentality, the compounding effort of like, if you run up 5K to 500K and actually sell that, and then you save that, let's just say it's 400K, right? You missed the top by 20%. Sell out, you have 400K now instead of 5K. If you then like reinvest that into like other on-chain plays or even like other more fundamental plays, like there's a lot of people who entered into the market like very late in 2021, made some great like NFT flips or something like that. Maybe they found Solana NFTs and they were actually able to sell, and they sold to cash. Then a year later, all of a sudden, like no one thought it was possible, but just a year later from the top of Solana, it was trading at $10, right?
Mm-hmm.
So if you're able to save that 400K and then ape it into whatever the next Solana at 10 opportunity is, and it 10, 20x's, all right, now you're from 5K to 400K, then from 400K to like 8 mil, bro. Like
Yeah, exactly.
that is serious compounding, right? But you're only allowed to do that like if you actually rotate at some point, right?
And I think you also actually have to believe, like part of, I'm sure you did a lot of research, like post Solana FTX crash. Like, I think most people wrote it off, and me included. I mean, I didn't have much money back then, so it wasn't like, I'm not coping over that because I didn't have enough capital to deploy anyway to make a difference. But just like, I remember when it happened, I was like still ETH NFT guy. You know, I think I had a couple ETH to my name, but I just remember everyone saying, okay, Solana's dead now. Like, it's just gone. And I think that was just like, and they had kind of every reason to think that from like an outside perspective, just because the FTX collapsed. So I think there are spots like that, but you do have to develop your own conviction. There's a lot to go with this on chain. Like as a wallet tracker myself, like, yeah, I'll tail a wallet into stuff, but like, I can't just let that be my all encompassing thesis. Like if I buy something, I still gotta like do my own research and make sure I'm developing my own thesis beyond this person bought or this person longed, because you're never going to truly compound just tailing people's convictions for sure.
It's impossible. Like it's actually so impossible, and it's so tough because on one end we're all on CT. We all love CT, and we see traders get hot hands, and you just like, it's such a compelling feeling mentally to be like, oh, I don't have to think because insert trader is hot. I'm just going to buy whatever they buy.
Yeah.
But you can never buy it on the size you need to make like a really big change in your portfolio. Even if you do, the second it goes down, you won't have the same conviction. So you sell. Like, it's happened to me so many times, it's actually insane. Whereas like 90% plus of my current portfolio value is derived from plays that I made off of like my own conviction, right? Like, you know, and that's the majority of the people I know who are successful to any small or large degree. It's the same way, right? Like, I think there are people who definitely get like a one-off hit.
Oh yeah.
And cash out. And they're smart in that way. Like, that's their edge, is knowing like, oh shit, like I just tailed this one dude this
I got
one
lucky.
time and it 500x, like I'm out, you know? Like, and like that can work too, but it's a lot less repeatable for sure.
Yeah, I mean, I've had some big trades just like wallet tailing someone really early or doing on-chain tracking, but they never felt as good as the ones like I really believed in. And like, you know, I'd shield to my friends like, yo, I think this is really something that's going to go. And they're like, nah, I'm good. And then, you know, you come back like 100x later. It's like, that's the best feeling. Not like the I told you so, but just being right about something, I think, is a good feeling. Being right and then making a lot of money off of it is the best feeling, for sure. I would also think you talked about how a lot of people didn't think Solana would ever crash and stuff like that. I think that plays into this cycle as well, because I'm seeing a lot of talk about like, just because Trump's president means like, you know, the 4-year cycle is not intact, we're just gonna be the NASDAQ forever and go up forever. And I think that's a lot of naivety, for sure, because I'm not a bear by any means, but I do think people think like this is just going to go on forever. And I know you got me hooked on the book The Hindmost, and you can talk about that too, but just like
that's the greatest book on trading.
Dude, I've been listening to that. The audiobook's fire. I've been loving it.
The audiobook goes crazy, bro. People
he cooks on it.
Feed me on it, bro.
He cooks.
I've been telling people to read this shit or listen to that shit for
if you're listening to this podcast, read that book.
Devil Take the Hindmost. Go on YouTube right now. I don't care if you're in fucking Ethiopia right now. That shit is free. Devil Take the Hindmost. YouTube. You could even skip part 1 if you want. Just listen to part 2. Telling you, that shit is crazy.
Yeah, because I think you just draw so many parallels, like with like the Japanese bubble and even like the tulip bubble. It's just like I would hear these stories and I'd be like, I've seen this on CT. And like I think people think we're in such a unique industry, which we are tech-wise, but like humans are still humans. Humanity is still humanity, and the greed is the same. So it's like you can still draw parallels. Like history doesn't repeat itself, but it rhymes. And so like I think just seeing those parallels in human behavior are especially fascinating. I think this is especially true right now as we're seeing people, like I said, Trump's president, crypto is just going to go up forever. And I'm seeing people like legitimately bet on that. And while that might be true maybe for Bitcoin, I think it's not going to be true for crypto. Like stocks have bear markets still, the strongest ones. So I think,
like the companies that are enabling, the companies that created a super intelligence that will replace humanity, most likely, it seems, we're all down 75%, literally 2 years ago. But yeah, I mean, you see that in Hindmost, that with every technological revolution, the people begin to believe that we've entered into a new era where, the old rules no longer apply. In today's world, that means the cycle theory no longer holds. Things will go up only forever, because of these fundamental reasons. And I think a good nuance that I also realized from that book was that a lot of the reasons were super legitimate. Like in the 20s, the U.S. had really insane growth, both in the market and in the economy, like every year. In the 1990s, like the internet turned out to be an extremely revolutionary thing, evidenced by literally everything we just talked about, like is not even possible to fathom 30 years ago. But here we are. So there's a lot of legit reasons to believe in that philosophy. But on the other end, it's like, if people are up a trillion X, they're gonna sell, bro. they're gonna sell. Like people just forget that when the market goes up a lot. It's like they're looking at their balance and they're like, oh, this keeps going up, so it has to just keep going up, right? And in crypto, it's aggressive, man. That's the thing that makes crypto both way better but also way worse than stocks.
Reflexivity, right?
Like the speed of the ascent. I mean, like Bitcoin is up 6x in a year?
Yeah, I mean, it was the bottom was 19 or something.
Yeah, 16, 19K a year and a half, 2 years ago.
Yeah, wild.
That's crazy, bro.
But people on CT will be like, that's only a 6x. I'm like, well, you tell that to a TradFi guy in stocks, that's insane, unheard of for an asset of this size.
Yeah, bro. Even stuff like Hyperliquid, that shit launched at $2 on Thanksgiving night.
Dude,
and
your tweet is so far.
A month later was up 13x, bro. Yeah. On size. I mean, obviously we can talk about Trump, but that's its own unique case. But even outside of that, there's been opportunity after opportunity to multiply your money aggressively in crypto. This is without even considering the on-chain stuff.
Well, I think the good point about that I want to point out, though, is that for people like me who have grown a portfolio to a decent size, and I know a lot of on-chain traders are listening to this, like, I think the one problem with on-chain is unless you kind of just shotgun and hold forever, it doesn't scale as well. And so, like, being able to alter and then notice these opportunities like Hyperliquid, where you could shove 7 figures easily without, like, huge price impact or anything, and pretty limited downside. I mean, like, Hyperliquid, like, it kind of launched and hung around there, and you kind of, like, felt like, okay, it's not really going much lower, and if it does, it's whatever. But I think to really compound your port, you're going to have to find those asymmetric bets where you can shove that size in, because, like, yeah, you can keep gambling and try and hit that 2K to 1 mil, you know, pump fund, but, like, it just doesn't scale as well, and also it's not as repeatable. And I think that's the thing, is, like, I think that's one thing you're very good at, is recognizing those spots where it's like, yeah, I can play size here, and my risk is pretty defined, and I think those are the best types of plays for sure that people can learn from.
Yeah, it goes back to what we were talking about earlier, and, like, I'm going to contradict what we were talking about how if you're good at one thing, like, stick to that thing. But on the other end, like, it's just like any sport, you know, like, I'm sure, like, a lot of people listening to this, they played some sport, basketball, you know, football, whatever, hockey, whatever. You know, the difference between a solid rotational player versus a starter versus an all-star versus the league MVP, it's often not, like, the starting point. Like, yeah, sometimes you get LeBron James is the chosen one from the beginning, but a lot of times it's who can, like, add the tangential skill the fastest, right? So you can go, you know, like, let's say it's basketball, right? You can enter into the league as a guy who can only shoot threes and play defense, and mature into someone who has a crazy bag and it's like Paul George, right? Doing all these step backs and all this other stuff.
Giannis, bro,
right?
like, he came in skinny, couldn't shoot, couldn't do anything really. He was just kind of a 7-foot prospect, and then you know, he's one of the best players in the NBA now. Same with Jokic, like, second round, last pick, and I think that's a good parallel to draw, because I do think people, you know, it is kind of contradictory to what we said. I think you should focus on what you are good at for sure. Like, if you are some of these FNF guys that print 50K a day just sniping migrations, bro, like, that's easy money for you, and you should keep doing that for sure until it's gone. But I do think at a certain point, you know, once you reach you know, mid 7-figure port and whatnot, you're just kind of like, well, it just doesn't scale as well. And also, it's very time intensive, and I think that's another thing, is, like, with Hyperliquid, if you shove $2 to $3, man, you could have just sit on that and, like, walked away, you know, lived your life for a bit. You know, red hindmost, done whatever, right?
Yeah,
like,
100%.
Like, you could have chilled and outperformed everybody. And I think those are the spots that are the best, because it maximizes your health and your wealth, right? Like, you know, you can sit on meme scope on Photon all day and thin your hair out for 18 hours. And yeah, maybe you'll make 50K a day, but then someone can just be like, Hyperliquid, good product. Shove 5 mil at $2 and just, like, lap you over and over again. And so I think recognizing, like, that, I think that's the ultimate evolution, is just getting to that point. And I think we've seen that a lot with on-chainers. Like, I mean, most of crypto old guard that's, like, retired started out degenning on BitMEX and, you know, all those listings. So it's like, we all have that degen in us, I think, most crypto people, unless they just came over from, like, TradFi 4X. But I think you do have to evolve and add that tangential skill, and I think it's pretty essential.
Yeah, it's like, if you want to hit that next level, then that's what it takes, right? Like, that's, you know, that it just is what it is. And, like, there are ways around that. Like, there, you know, in the same way that there are just, like, people who are generational shooters and not, like, that great at anything else, like, still have great careers and stuff. Like, if you are on-chain meme only, but you just figured out that, hey, like, I'm not going to flip Pepe, I'm not going to flip Whiff, like, I'm just going to hold.
Yeah.
You probably made more money than my bum ass, right? So, like, there are ways around it for sure, but I think having, like, an intentional approach to, like, this is my cash cow right now, is, you know, on-chain memes or maybe even perps, whatever. but I need to invest in my skills to like, expand to the more fundamental plays or the bigger momentum plays. Like Trump could have given you all the returns of Hyperliquid and way more, even if you were relatively late to it, if you just had a good sense for like momentum trading, right? But for me, that's always been a weakness, right? So when I saw it, I was like, yeah, I don't really know if I'm going to buy this. And then it 10x's again in my face, right? So like that's to 10x on size is a rare opportunity. And that shit did it in 6 hours, right?
Yeah.
So there's all types of different opportunities, but the people who are able to capitalize the most are either generationally good at one thing, or they scale their skill set with their portfolio size. So
I will speak to the, like you said, like you can be great on chain, but just hold the whiff and pep in. I think the hardest part about on chain, and I think Anon can speak to this as well, is that all of them look the same under 1 mil or under 5 mil, right? So it's like, it's really, I would say the people that make it, like Pow and stuff, and shout out Pow, shout out Punlord and whatever, they kind of just hold everything to zero. But then you also have to have the capital and the portfolio to do that, right? So it's like, I think the hard part about on-chain is, like I said, they all look the same under 5 mil. So you either take profit on them, sell, round trip to zero, round trip everything to zero, hoping you hit the peanut that goes to 1.2 bill and make up all your losses. So I think it is really interesting because, like, it's interesting seeing the win rate, right? Because, like, I would say the top P&L people on chain probably have like a 10% win rate, and it's something I've noticed. But that one hold they held forever that they diamond handed made up their losses times a 100. So it's really interesting to see. Whereas like you can still make a ton of money with having like a super high hit rate, but it's kind of like the difference between like scalping and swinging in a way.
And like everyone has their own style.
Mental illness.
Yeah, you do have to have a mental illness, for sure.
You said they have mental illness?
Yeah, you do.
I'm sorry, but like, I'm just gonna bring some idiotness to this podcast. My low IQ. Like, have you talked to any of these people that have just like held these coins? I had a genuine conversation with them. They have mental illness. Like, I really don't know even what to say. Like, it just relates to how you are talking about, just having like knowing when to shove sides in places. Because I mean, that's something I'm struggling with personally. Because I'm not gonna say obviously, I've built up a small portfolio now, and now I'm kind of like, what do I do with this money? Like, my average ape size is like 4 or 5K. Like, my way of compounding this is kind of rough right now, just being in the trenches all day and just seeing like Pow, and I also say like Spider as well, like watching their success, and it's just like they're insane, dude. I'll give them their flowers, man. Like, you can't hate like what they've done this cycle. It's some crazy shit.
I would also say though that's just not for everyone mentally though. Like, dude, they'll literally blast like 2 mil into something and watch it go to zero, and like they're chill with that. And I'm like, bro,
that's crazy.
That could never be me. I don't care how rich I get. Like, just something about, maybe it's because I'm a big basketball player, so like I hate missing shots. It's like I don't know. You have to definitely be a specific type of person for that style of trading, and I think accepting that maybe you can't is okay too. But yeah, I'll give them all their flowers. Like, their ability to just like top blast absorbent sums of money and just like not care is fascinating, honestly. Like, I'd want to see some Stanford lab experiment on their brain, just because like, dude, what is their detachment to money at this point? It's pretty incredible.
Yeah, no doubt about it. I mean, and you see it in every market, right? In TradFi, you have these guys like, like Bill Huang and all this, or Masayoshi Son, who will, this dude, like Masa's son will top blast billions of dollars into a stock, like, without hesitation, right? So I think there are certain people who just have that mentality, and like, I think it can be gleaned to a certain extent, but I don't think you can ever like truly become that way if you don't have that sauce from the beginning, right?
I agree. I think you're kind of just like born with it, and I think that's like that's hard to accept for some people for sure, because it's like, oh, I want to be like Pow, I want to be like Spider. But I think I've come to realize, even as I've grown to like have enough money to where I would be okay top blasting. I mean, not their size, but just like in general, I'd be okay losing this sum of money. I'm just still not like that. You know, I still don't like doing that. Like top blasting is probably my weakest part of my trading. It's just like something about seeing a huge dick green candle and then saying, yeah, I'm going to buy that, is just like, that's probably my worst trait for sure. Which is interesting, because it's like it saved me a lot because I joined right before FTX happened. So like I was grinding NFTs, meme coins all throughout the bear. So it's like it saved me in that sense, because like I would learn that like, yeah, I'm not going to FOMO this. It'll be at zero tomorrow. And 99% of the time it was. But then as the markets changed, then top blasters start getting rewarded. So I think it's really been hard to come out of my shell of like bear market PTSD in certain situations, because I'd never seen mania before, truly. And, you know, I'd hear stories from my friends about, oh yeah, it's wild, it's like this, it's like that. But those are just secondhand accounts, right? And unless you experience it for yourself, it's kind of hard to change.
100%. Yeah. And like, I mean, yeah, in 2021, there's definitely a lot of generational top blasters that, you know, really put a lot of people to shame, even for like a lot of today's record. You know, people like Alex Weiss, who would be long, like, I mean, this dude was longing like hundreds of millions of dollars worth on perps, like from the hospital, like in his hospital bed, like
Vice City,
taking a
baby.
selfie.
Monaco 2025.
Yeah, bro. So it's like there's definitely levels to it with any like given mentality, but I just think the mentality I've chosen to adopt is like, you ain't got to be LeBron James to win the championship, right? Like
Drew Holiday, bro.
You know, there's a lot of different kind of players who win the championship. There's a lot of different kind of players who are the best player on the championship winning team, right? So just being like knowledgeable of the fact that being like achieving our best form for basically most people, like most people have some edge that if they pushed it to its absolute limit could make them a ridiculous sum of money in a ridiculously short period of time. But to your point, because they say, oh, I want to be like Powell, I want to be Alex Weiss, I want to be GCR, and they're not that archetype, then that's how they fucking blow up their whole portfolio, right? So,
yeah, and I think it's especially easy in crypto because it's like, you know, I'm like a 6-foot white shifty guard. So like growing up, I couldn't say I'm going to be like LeBron James, because it was just like, okay, yeah, I'm not going to be like LeBron James. I'm not going to be 6'8", 250 pure muscle with a 40-inch vert. Like that's just not going to happen. Like impossible. And so I think like with sports, it's like you kind of get a sense of, oh, hey, I kind of play like this guy. Maybe I should try and emulate him. Whereas, like, I feel like in crypto, it's kind of the opposite, where you just see LeBron and then you're going to be like, oh, I'm going to be like him, even if it's physically impossible. Just because there's not really like that precursor that's, you know, genetics or whatever it is. Because I do think there's genetics in trading, especially mentally. Like you said, like, I think some of these guys are just born with way more risk tolerance, and it's okay if you have bad risk tolerance. Like, you can still make a ton of money in certain situations. And I think a lot of the bad risk tolerance people go to building so they can control everything and like do like look at the pump fund devs. Like you can. I think that's the cool thing about crypto is I think a lot of people try and get trapped into being the most, like, the only word for it is like sexy, the most sexy archetype of trader, and they all want to be like this, whereas like they don't know that, like, dude, there's so much more ways to make money. Like pump fund devs, dude, they're probably one of the richest people this cycle, and like,
100%. They definitely made more money than the traders did.
Yeah, they made more than like probably the best meme coin trader easily.
Hey, bro, even like the 7th tier Telegram bots are printing like a million.
Oh my gosh, like Photon, Bolex. Yeah, but even the 7th tier ones, like, no offense, I mean, I love BonkBot guys, but like those guys, like that's kind of just like, oh yeah, BonkBot. Like those dudes are still printing absorbent money, and like you don't even have to be a trader. Like you don't have to touch trading. Like I know Aeon and whatever, he trades meme coins, but like I don't think the other pump fund guys do that much. I think they're just kind of devs. And it's like, just because you might want to be in crypto, and I see a lot of people coming to me IRL and say like, bro, can you teach me? Can you teach me? And I'm like, I don't really want to do that. I'll tell you about crypto. I'll teach you about crypto itself and the blockchain, but like, I'm not going to teach you how to trade like me because you aren't me. And I think more people need to recognize that, like, hey, I'm good at these certain things and I'm bad at others. I think I do think everyone wanted to hear from you, Kell, especially like we talked a little bit about the 4-year cycle and whatnot. But what do you make of SBR talk? I feel like CT is more split than ever right now. Of just like, it's over. This is the top. So much froth. And then some people are like, bro, it's not even begun. And I think it's especially come up with all the memes about like the baseball innings, right? Like people are like, oh, it's the top of the 9th. No, it's the bottom of the 6th. It's actually the 1st. So I think I'd love to hear your thoughts.
Yeah, so the way I'm thinking about things, and like the way that I have since Trump won, is that there were 3 like overarching trades of like consideration. One is the expectation of what Trump might do, which is certainly peaked. He's now in office, right? So now it's like put up or shut up, right? Which is why people are so anxious, because we built up our expectations so high where it got to the point where everyone thought, like, there was a period where people were like, Trump is going to abolish crypto taxes, he's going to max long BTC with the treasury, like all this kind of stuff, right? So that's one trade. And I think that's mostly done. For the cycle thing to hold, I think one of the 2 following trades, or ideally both, would have to hit, which is the reality of what Trump does. So are his policies bullish or bearish, and to what extent? And then 2 is, to your point, the Bitcoin reserve thing. And I think the thing that is very uncomfortable for myself, and probably for a lot of people on CT, is that there's very minimal edge that any of us really have in assessing either of these 2 things. Like, when Trump won, it was easy to see that everyone would consider this to be bullish, right?
Yeah.
So you could gamble on that. And even if you didn't think that before he won, when everything starts ripping, like right after he wins, it's like, all right, I'm going to be long now. Everything is ripping. So like on-chain is going to cook, right? Now it's like, all right, Trump is signing all these executive orders and people are watching the inauguration and watching all this stuff, trying to figure out, oh, is this senator going to announce the Bitcoin reserve?
Like, the wellness thing today, like
no one has any fucking edge in assessing any of that,
Yeah, it feels like gambling for sure. Like, I feel like so many people are waiting for headlines to bail them, or like, I don't know, I just hate seeing like tweets that are like, well, if Trump announces the SBR, then I'm just like, this is literally like, we're like doing the moon cycle stuff now. Like
100%.
Like,
and it's
what are we doing?
Like, there's no discernible edge there. So, like, it feels like the first trade, which is the expectation of Trump, is almost like in a complacency stage. Whereas the second and third, like, trades of the Bitcoin reserves, both in the US and globally, and what Trump's policy is in a sort of disbelief stage. So, like, if those other things fall through and there's no Bitcoin reserve and Trump's policies create a ton of inflation, which create rate hikes and all this kind of stuff, then, like, the market's probably fucking cooked, And conversely, like, if Trump comes out tomorrow and says we have started buying Bitcoin, and half the G7 countries say that they've been buying this whole time, that's probably bullish, right?
Yeah.
But because I have no edge in actually assessing, like, the probability of any of these things, like, my approach is to take, like, more asymmetric bets and structure my portfolio in a way that, like, if all these other trades fall through and the market is, if the top was literally last weekend, I want to be in a portfolio that will survive if like Bitcoin is going to go down to 60K or 70K. But also, if we go up a lot, one, I can re-enter easily if needed. But really more important than re-entering, because that's dangerous, is buying coins that have like a low probability of success, but a high, like a very high outcome, which is if they succeed, they're going up, 500 times, right?
Mm-hmm.
And so my rationale for doing this is like in 2021, early 2021, crypto was up a ton. ETH was like, Bitcoin is up a ton. ETH was up a ton. You probably were seeing hella top signals, like El Salvador buying all this other stuff. I think what the best move back then would have been, in hindsight, was to, like, if you were long crypto from the 2018 lows, like a lot of us are long crypto from the 2022 lows, the best move was probably taking a lot of chips off the table and then betting on the most retarded things you could find with like 0.5% of your portfolio. And ideally, like, if one of those was Axie Infinity at $1, like, like that shit went up 100 times.
I think that's what people fail to understand, though, is like, okay, you could be, I know traders on chain, right? And on chain's like the most risky part of crypto that are 100% stables, and they just trade with stables. Like, they'll just aggregate Jupe or whatever and then buy meme coins. And so, like, they still have crypto exposure at most points, but, like, they're just stable traders. And some of them make millions and millions. And it's like, and people are like, bro, you don't even hold any crypto? What? And I'm like, well, I think a lot of people think that taking chips off the table means they need to leave crypto. Or, like, I see that all the time. I'm like, oh, stabling a big percentage of my portfolio here. And people are just like, bro, you should just leave if you're bearish. And I'm like, what part of that is bearish? I think, I'll say I'm pretty heavily stabled right now just because, like, yeah. And then I know we had WooPig on here. I don't think you know him, Kell, but he's an on-chain trader who's very good, and he basically just stables whenever he hits a certain portion on his DGen Sol wallet or whatever from trading on-chain, keeps however much his normal stack is, and then runs it up again. And it's like you said, I think people discount the fact that, like, you can have chips off this table and still be playing the game. And I think more people need to recognize that for sure.
100%. And like the late bull markets, they still offer these crazy opportunities to, like,
probably the craziest. Like, I mean,
yeah, the craziest ones. So like they don't need, like, everyone wants to dream of like, oh, I saw Trump at 50 cents and I full ported and then sold it at 70. And like there's probably a few people out there who did that, and like well played to those people. But like a lot more likely strategy for success is like, all right, I've just been running up on chain in this hot season for 4 or 5 months straight. Like, this isn't going to continue forever. So I'm going to keep pressing this, but like just with less chips, right? And if you hit a Trump or even like a Barron from 2 mil to 500 mil, and you got 1% of the supply, like, you still just made a shit ton of money, right? Like, I mean, it's not like you were going to buy 20% of the supply of these coins anyways. So, that's kind of my mentality, is like, when the bull is later and later, you just want to be more and more defensive, but you can play defense in a way that's still, because like a lot of the more like boomer traders, if you will, they'll say like, all right, I'm going to be in stables in Bitcoin, like, or I'm going to exit to Bitcoin. And I'm like, I don't really know if I want to just like hold a ton of Bitcoin at the potential end of a bull market. Because if it goes up, yeah, like it'll go up, 30%, which is nice. But if it goes down, it's still going to go down like 60%.
Yep. So might as well just like put it in something like Fartcoin. That if it goes up 10 bill, I'm not even in Fartcoin, but just like something, where it's like if the cycle's not over and then we do reach mania phase, you'll capture way more upside, but your downside's pretty similar. And so I think that's a really good point.
Because you can do that like with having a lot of cash too. Like I was telling somebody, it might have even been in a conversation with you, that like I would rather hold like 90% cash and 10% like choose your shitcoin of choice on chain than hold like 100% Sol if I was a trader, right? If you're an investor and you're holding for 2030, that's different. But if you're a trader, like for me at least, that is a lot more in line with my approach. Now I'm not 90% stabled, but that's kind of my view now is like I want to be looking for the Bored Ape Yacht Clubs and the Axie Infinities of the world that are, if they exist, then like if 2025 is about to be a crazy year that everyone thinks it is, then there are some coins or projects or NFTs or yield farms, etc. right now as we speak that are at 5 mil val, 2 mil val, 1 mil val. No one's talking, like no one on CT, no one in any Telegram group. Like there might be 100 people in the world that are talking about them right now that are going to go up 1,000x. So I think everyone's goal should be like, let me make sure I don't lose everything. And then if I put 1% of my portfolio into like 6 or 7 plays that I think might fit that description, if they all go to 0, I've only lost 7% of my portfolio, which is recoverable. But if even one of those is the Axie Infinity of the cycle, then you return the entire portfolio. So,
no, I think that's a really good approach. But I think that also I think that's a good defensive strategy too, because it's like playing defense but still going for steals. And I think I think that's really good. And I think a lot of people, I think that's kind of what GCR was saying as well in his tweet. I think a lot of people took it as like he was being bearish, even though I'm not a GCR glazer at all. I haven't been in crypto long enough to even know much about him, but people saw that one tweet where he was like, now's not the time to just be like chucking on all the leverage and stuff. And I'm like, I thought this was pretty straightforward, guys. Like, I thought we all kind of knew this. Like, the time for more leverage was at the start of the trend, not at like the frothiness. And I will say to everyone listening, like, yeah, like Kell said, there's a lot of DeFi protocols projects out right now, but I think a lot haven't launched yet too. Like I think I said this about AI too. Like if you believe AGI is coming, if you believe in the AI super cycle, if you believe Bitcoin to 700K, like, dude, there's still going to be so many more. I mean, like even Trump style trades, and I truly believe that. Like, will there ever be another president's meme coin? Maybe not, but like return wise, I think there's definitely going to be more spots if that happens. And if it doesn't, I think you should be prepared for that as well. And I think either way, you just shouldn't. If you've made life-changing money, change your life. I think that's a big
100%. 100%.
Dude, change your life if you've made life-changing money. Anyone listening, like, change your life. It's not real till it's in the bank. Like, I think a lot of people hold stable coins and they feel like they've changed their life. But, like, dude, as a person who holds too many stable coins and should take it to cash, like, you probably shouldn't hold a lot of stable coins, especially when I saw FTX panic and all that. I would never discount crypto contagion as well. Like, even if we get legislation, even if we get stuff, like, you never know, man. And I think you should always secure what you can secure, for sure.
Yeah, and like you said, like, you can do that in a way that still allows you to, like, degenerate gamble, right? Like,
of course.
I mean, the people in 2021 who were doing this, but then investing in, like, there are people I know personally who, like, were hitting on Bored Apes, Art Blocks, and Axie, like, while also, like, selling the other shit, right?
Yeah, I mean, I think about it this way. Like, I know a lot of people who have, like, let's say a 5 mil port, but in reality, they're only really trading with, like, maybe 100K. So it's like, if you did think things were frothy and you wanted to take some chips off the table, bro, you could take out half your port and you wouldn't be trading with any less capital technically. Like you'd still be fine and you'd be way more secure. And I think a lot of people don't understand that. And also sometimes it can just make you hungrier. Like every time I've withdrawn a big sum to the bank, and even if my trading stack technically hasn't changed, I just feel like, man, I got to reach that number again that I took out. And so it's like kind of lights another fire in me to like, you know, go again. And so I think some people need to take a step back and be like, do I really need to be like, if you have 800K in stables that you're not planning on deploying into Aave, or that you're not planning on deploying into crypto again, take it to cash. Like there's no reason to just like hold stables flat, I don't think, if you're not going to use them. So I think that's a really good point.
Man, y'all cooked.
Yeah, you were great.
Kudos to y'all. Kudos to y'all. I was really hopeful in this pod. But I think we're going.
Oh, he works a 9 to 5, and I think he got cooked today.
You know, I got a little cooked.
He's a wage
and you
cut.
know what? But honestly, it was kind of nice listening to y'all talk. Just kind of give me like, you know, a little just breather of like relief. You know, I've been just kind of just trenching and just caught up in all this horse shit. And it's kind of good just like to take a step back, breathe. You know.
I think people want to hear this because, like, I think a lot of our other podcasts have just kind of been like, what coins happen and, you know, metas and whatnot. But I think this had a lot of really smart advice from Kell. Kell, do you have like a hindmost ref link? Because you need one. You need to somehow.
I need to monetize the amount of people I've sent to this.
Bro, you need to get an Amazon affiliate link for hindmost, and then like.
The funny thing too, though, is that I'd be shilling the free version.
Oh yeah, that's true. I bought it just because I wanted it on Apple audiobooks, but I forgot about the free. You could probably find it on
my version of the monetization is like when like the random, because like having a account that has some level of presence on Twitter is definitely a double-edged sword. Mm-hmm. But one of the nice things is that in a ton of random places, especially if I'm going for like an event, there's just a ton of random people who like fuck with me from a distance that I've never met. But because of like, you know, whatever like mental framework or stuff like that I've discussed, you know, they've been able to incorporate that or go read these things for themselves and like be successful doing that. So that's brought me to a lot of like, you know, interesting events, interesting places, see some interesting things, meet some interesting people. So that's good enough for me. And you know, maybe someone listening to this will buy me a Lambo or something.
I will. If I hit where I think I can hit, I got you, bro.
All right,
y'all
heard it here. This is going to be inscribed on the blockchain.
It's
gonna pull through, bro.
We're gonna do sound on XYZ Mint or something for this podcast.
100%.
Yeah, but all right, I'm gonna go ahead and wrap it up. Kell, thank you so much for coming on today, man. We really appreciate it.
We appreciate you guys.
Yeah, thank y'all so much for listening. Peace.